From Sydney this morning, we're going to speak to Peter Esho, Chief Market Analyst at City Index, joining us. Peter, I guess when you're not an American, how much is your confidence shaken by this failure by the Super Committee to, I guess, agree on these budget cuts?
I think it's just another element in the market, in a market that is really focusing now on revised growth assumptions, particularly in the Asian region. I don't think investors here are really too concerned about the political tussle in the US. I mean, the overwhelming expectation is that eventually they will reach a deal and it will have very little impact on the long-term financial stability of the United States. But in the short term, while we go through Europe's issues, this just adds another layer. And I think all those investors and traders out there that are eyeing stocks in the region, particularly this very high growth region where there are some very rosy assumptions out there, the conviction to go out there and buy stocks is fairly weak, and I think that just discourages further investment and that all weighs on stock prices, and that's what we're seeing today.
Yeah, Peter, talk to me about the sell-off on Wall Street. As you mentioned, no one wants to hold stocks, especially as you go into a long weekend on Wall Street, right?
Yeah, absolutely, and I think for us, what's happening in the US is very important. But we learned, we learned the lesson the last time the debt ceiling negotiations really went to the 11th hour, and came at the expense of the US's credit rating being downgraded. But I think if you look at regional stocks, if you put aside where the US market has trended over the past few sessions, and if you bring it back into Asia, last week we saw a stock Giordano listed in Hong Kong, for example, which came out with some very strong sales numbers, but the stock was down, and that's purely a reflection of expectations in stock prices. And so I think while we will take negative offshore leads, particularly in periods where US investors do start getting a little bit concerned, we have our own issues in Asia. We have our own issues in Australia around base metal prices, around high growth exposures, around the Chinese exposures, for example. So it's a balancing act. It's really taking those offshore exposures and quantifying them.
Yeah, so put it all together for me. Where are markets headed then?
Okay, in essence, we don't think there will be much upside for stocks until the end of the year. We think the circuit breaker will be potentially Chinese stimulus or easing off tightening in the first quarter of 2012. Until we get that, I think it'll be very hard for equities, particularly in Asia, to rebound. And so, it's probably not the best time to be buying high-growth stocks at the moment. Stick with the safe names, stick with the names that provide income.
Okay, well, also declining in the session, I got to talk about Qantas since you're based in Australia. Earlier on, I spoke to the Industrial Relations Minister in Australia. Take a listen to what he had to say about this arbitration.
It is disappointing that Qantas took the decision to lock out its employees. There had been industrial action which had been damaging them, but we regarded that as a fairly extreme measure. It had inconvenienced many passengers, and I think has done them, their reputation, a great deal of harm. But I think now at least they can progress and the unions can progress on the basis that there will be an arbitrated decision.
Yeah, so Qantas' reputation has been harmed. Its stock down about 35% on the year. What's your recommendation on Qantas?
We like Qantas because it's trading at a big discount to its book value. If Qantas as a business was to cease trading today, sell off its planes and pay off its debt, there's about $6 billion of value there, excluding goodwill from their frequent flyer business, from Jetstar, for example, which hasn't been impacted by this at all. And it's trading at around $3.5 billion market cap at the moment. That's a very political message. In terms of the market's looking for certainty, and Qantas is really looking at securing its cost base as it pushes into Asia. So we think 2012 will be a better year for Qantas. We think a lot of the bad news is in the price, and we think it's a great value play as an Australian airline and as an Asian platform for more growth exposure.
Okay, Peter, thanks for your time today. Good talking to you. Peter Esho.